Hello and welcome to Core Finance. I'm Matt Brown. I'm joined by Alejandro Zambrano, who is Chief Market Analyst at Amana Capital. How are you today, Alex?
Very good. Excited with the Fed coming up this evening.
Certainly the highlight of this week. So it's quite apt. We're going to talk about the US dollar today, and you've kindly brought along a couple of charts. Starting off with the dollar index. The dollar's been out of favour this year.
Way, yeah.
So where does it go from here?
I think it's tricky, right? I was here, I think, 4 or 5 weeks ago talking about maybe price finding a low around the levels or the lows we've seen here in 2016 on this chart. And the market has tried to break down lower, but it hasn't had like a significant pullback in any way. And now we're approaching quantitative tightening. And the Fed themselves has told us that any reduction of their big balance sheet is going to be done in a way where the market is not being impacted. And we'll see, obviously. They might reveal some details today. And I think it's going to be difficult for people to really understand, interpret what he's saying. But my general rules are the following. Like if they, for some reason, want to reduce as much as possible, say over the next 3 years, and then that would be too much in a short period of time. And that could sway the way people trade bonds, right? So before, because they knew that they were doing quantitative easing, you would buy ahead and then, the Fed would get involved and it would necessarily support interest rates. But now when they're doing the opposite, we can have the opposite sort of effect. On the other hand, if they would say, well, we're gonna, get rid of this portfolio in a longer period of time, say 7-10 years, so it doesn't affect the market at all, then I think the impact of quantitative tightening is going to be minimal. So
understood. That's good. And with regards to the dollar, I mean, if we do see QT, as we'll call it now instead of QE, is on a shorter time frame than expected, one assumes that'll be negative for the dollar.
Not really, because you see, when you have higher interest rates, it would usually attract capital flows, right? So that's probably the number one factor determining currency flows over the last few years. So unless, of course, people, for some reason, the narrative changes and now people think that we're going to have some sort of recession, but that's probably not going to happen unless, say, interest rates gain by a great amount in a very short period of time. So I would look at the charts, see, if we clearly break away and break the lows from 2016, then the dollar index can potentially reach the June 2010 high. And then you have the next major support level, which is July 2013 high. And to kind of help us to interpret the message from the Fed, we can look at the government U.S., also the U.S. 10-year government bond yield.
If we have a look at this chart, as we can see, the yield is in at the moment a downward trend.
Downtrend, yeah. So it saw this big boost following Donald Trump getting elected. So Donald Trump has obviously promised or suggested that corporate tax could move down another 20-15%. And then I think the important thing is that he also wants to allow corporations to move money back into the U.S. at a lower tax rate.
Yes. I
actually remember this. I think it must have been 2014, 2015. It was actually when I started in the industry, when they had this old similar tax like this, and there was a big theme back then that these companies can move all the money back to the U.S., so that should lend some support to the dollar. Obviously, if we look at the bond yield chart again, we're in a downtrend. Probably because of Hurricane Irma and Harvey and all of this, and lower inflation in the U.S. But if the quantitative tightening, any of the comments from the Fed tonight, if they're seen as hawkish, then that would probably cause the downtrend here to end. So we push above on the other side of the trend line. And I would use that as an indication of a hint that we could potentially have a reversal in the dollar index. On the other hand, if the yield pushes back down to the lows and you see a break to the downside in the dollar index, and then they would confirm each other, these two indicators.
Understood. What do you think the Fed will do, certainly Janet Yellen tonight? Do you think they're going to start the QT? Do you think they'll announce that, or
it would be appropriate to not necessarily start it, but it would be appropriate for them to introduce like more details to the plan, and then probably gonna say that maybe by early next year they might do something. I would be quite surprised if it would start today. The reason for this is that if you look at the comments from most Fed members, and also Janet Yellen has been very, very quiet over the last few weeks. And when they have said something, it's more about inflation, that inflation is now where it should be at. So if anything, all the different comments we've seen so far don't necessarily suggest that they're going to do anything about quantitative tightening in a major way. But what it does suggest to me that they could potentially lower the dot plot. So the Fed themselves penciled in a third rate hike for this year. But it's such a short period of time now, so inflation needs to soar. Non-farm payrolls probably needs to be 270, 300 for the next 2 months as the minimum, and wage growth needs to pick up dramatically for them to actually go ahead and raise interest rates. So there's a genuine risk that they remove their own forecast of a rate hike for this year, and that could of course be bad for the dollar.
Understood. So all eyes to the Fed this evening. Alejandro, thank you very much for joining us today.
Cheers. Thank you.
Thank you.